Hello and welcome back to Building Wealth on the Go, a podcast by KLT Wealth Management. Today is February 20th, 2024, and we're back with Season 5, Episode 2 of our podcast. I'm your host, Brad Wilson, joined by my colleagues Courtney Beach and Joe Filiameni. Today, lots to talk about into what has been a up and down weather-wise month of February. We've had really, really warm weather down to pretty cold weather, and I think we're heading back up into the high single digits this coming week. So craziness on that front. The volatility of the weather is also mimicked by some of the volatility we have seen in the markets. So there is lots for us to sort of talk about today. But first, let's jump into sort of broad-based conversations on what's happening around the world with global to local, talking about recessions. So first off, sort of bigger news in the last few days, Japan and the United Kingdom, both in technical recession. So what is sort of going on in that sense, Courtney? What's happening over there? And, are we in the start of a shoe dropping where we're seeing a lot more countries entering this sort of phase?
This might be a trend for the beginning of the year, but the change in economy for both Japan and UK are for different reasons. Japan is having less demand in their domestic market, which has resulted in their recession. The UK has been floundering for years, let's face it. That's why they've had so much political turmoil in the last few years of change of leadership, getting out of the EU, all that other stuff. So it was bound to happen at some point. But also both are readjusting their stock markets as well, so that those changes are starting to reflect in the pricing. So between those is some of the reason why they're in a recession now. But is this the beginning for other countries? You know what? It just might be.
Yeah,
But it
I
might be
tend to
for
agree
different
with that.
reasons.
Certainly in Japan, and Japan's been suffering for many, many years, right? Their shrinking population doesn't help. So they just don't have the people to buy, to spend. And I think that is certainly adding to their problems. Whereas on the other side with the UK, certainly Brexit didn't really help the UK when they exited the European Union. I think that they are struggling. I think currently now it's just consumer spending has really, really softened. Now, I think that is going to be the global trend, is that we're not going to spend as much in 2024 moving forward. So we may see these technical recessions happen across the world. And keep in mind, a technical recession is two consecutive quarters of negative growth in their GDP, essentially.
And it's interesting though, because we talk about, not spending as much. We're in these technical recessions. The Japanese stock market index is up 16% almost year to date. So it's up almost 39% in the last year. So despite a technical recession, we're seeing strength in their stock market. And, we look back to North America where we're seeing the same sort of things, right? We see trends of, these high interest rate environments where we're putting pressure on the economy, yet the stock market still continues to push forward. So, there's this disconnect that we're not just seeing here in North America, and you're seeing it with Japan there. So I find that's really interesting, because we're entering sort of a period here where, yes, okay, in a technical recession, it could be relatively soft. Into a recession, it's not going to have a major impact. But to see markets thriving in some of the top years, that's where it's different. It's different environment for sure.
It's somewhat a wishful thinking, I think, strategy in terms of, looking at companies, especially in the tech sector, which we've talked about in North America here, and just looking at them, and they can do no evil, right? They can't do any bad, and just driving and forcing people, the valuations, just driving those valuations higher and higher, which is driving the market. But the underlying aspect is, if we're not spending, if consumer spending is down, then we can't grow.
Mm-hmm. And I think it's a tale of two tapes because we look at the UK. UK is a flat, has a like the FTSE, the FTSE 100 index. So the top 100 companies there, that's what they sort of track in London. It's flat year to date versus up almost 16% in Japan. And in the last year, it's down about 4%. So again, you look at contrasting. We're looking at two countries in technical recessions. One with a booming stock market, and one with a one that's negative in the last year. So again, very interesting that we're seeing, like you said, Joe, maybe there's wishful thinking, maybe there's more opportunities, right? Maybe the UK is finding itself in something where North America, you're going to see overvalued companies and whatnot. Maybe Japan, there's opportunity for investors, and those are being sought up right now, that you can get those opportunities, those good valuations, companies that may have had tough times, like you've said in the past, that that Japan's gone through, and maybe there's opportunity there that's different from where we are here in North America, and even alternatively in the UK. So definitely interesting, and something to watch for sure.
Yeah, we got some results this morning from Home Depot that I heard in terms of their overall spending is down in terms of what people are buying at Home Depot, and that was in such a boom, especially after COVID. So I think that is the trend for 2024, and we're going to start feeling that here.
Yeah. So we'll move on to Canada. Let's talk sort of a little bit more locally. Technically, we hit a recession at the end of 2023 as well. We'd kind of forecasted that coming. We had talked about it, I think, on a couple podcasts towards the end of last year about sort of that technical recession. So where does that leave Canada here? And Courtney, I'll leave it to you first. So what's the thoughts here? I know we should get some more information soon, but where does that sort of leave us into 2024 here?
Well, we were, like you said, Brad, we were expecting the technical recession to come. I think this is an opportunity for companies to reevaluate their books, and a lot of them have been doing that. We've been seeing them trimming, and you know, I think that from global to local, this is the opportunity for companies to look at their books and start making those adjustments. And we're going to start seeing companies sink or swim. The ones that probably should have, sorry, but died during COVID are, this is their swan song sort of thing. Yeah. And I think we're going to see more.
Were we actually in a technical recession? Because I hear some like StatsCan, correct me if I'm wrong, have they reported yet?
No, it's end of the month.
Yeah, so then like this is the Canadian Federation of Independent Business report, which anticipated recessionary report. So
because we got it for one quarter towards the end of the year. We had talked about that.
So it would be sort of interesting to see whether we actually hit that, but it was sort of that speculation. And I don't think it would be much of a surprise, to be quite honest with you, if we did hit the recession and stuff. So did we feel it? Have you changed? Do we feel when we go into recession? I think, that term that people say, oh, we're going to go into recession. Well, we go in and out of recession so easily that for your average investor, average person, you don't necessarily feel that, right? But although you do, we are seeing the job losses. And I think that that's the important thing to keep in mind, is that we're starting to see the job losses.
And we feel the inflation. Like the inflation is what the consumer feels. Like that's the tightening most people have, and we've been dealing with.
But despite inflation, we've seen lots of sort of strong numbers still, and I wonder if there's a bit of a pivot from these companies. We talk about, we headline this with global to local. I think you see that a lot. Like there's a lot more companies reducing their exposure internationally. They're bringing back a lot of production. They want control domestically. They don't want to deal with foreign. There's a lot more tensions, political tensions, international relation tensions now. I think you're seeing companies reevaluate some of their business models on where they're going with expansion, whether it be manufacturing, whether it be services, where they're actually setting up shop. And that could be a factor too, in that we're seeing, okay, it's more of a restructuring, but the outlook is still positive on some of these companies, that people are optimistic and have that view and that lens that, okay, there's some layoffs, maybe there's some restructuring, maybe there's some financial loss in the short term, but there is a bit of a pivot to something that's going to be much better in the long run.
Yeah, and along with sort of recession, then you do begin to hear from companies in terms of creating jobs and actually building out their business. Just this morning, I heard about Loblaws, ready to build another 140 stores. So typically, and this almost kind of contradicts what you would think, but a smart business will actually build during a recessionary period so that they can grow as much as possible as things turn around, which they will. So it's nothing like trying to build 140 stores when the markets are really really good and the economy is really really good. But you kind of try to you pick sort of your downtrends, and that's the time that you pick up steam so that you can ride the wave all the way up. So it's good business sense and very interesting about Loblaws.
Mm-hmm. Well, and if you're price gauging or gouging like
Yeah.
Loblaws was, why wouldn't you build another 140 stores, right? So, I mean, that whole industry, it's fascinating. I know there's lots of back and forth still politically with the whole grocery store debacle that's been going on for
Yeah.
months, right? It seems like they brought these guys in, what was it, summer of last year or early fall, and here we are 6 months later, and they're still trying to negotiate stuff.
Well,
So
if they don't sign the deal,
Well, really,
consumer protection deal, along with Costco, then the government might implement it as law. So I
mhm.
don't know how they can. Again, I think you end up sort of just you have it out there, and it is something to refer back to. But I guess how it's enforced is going to be another story.
yeah.
Yeah,
Yeah, like, will it really make
not
a
much
change
not
in
Well,
much is being
we're
retail? I
passed on
don't
to us,
know.
right?
And we're
That's
already bagging our own
And
groceries
yeah,
here and scanning our own groceries, so we're saving them tons of money by doing our own work and stuff.
yeah,
So it doesn't
yeah.
seem
Mhm.
fair.
So we'll move on to just the U.S. to kind of close up our global to local. We're starting to get some earnings trickling in. We've had earnings from some of the big companies. January sales slumped in general. We saw actually a pretty significant decline overall in sales numbers. But you look at some of the big company names driving up markets and whatnot, and they're just knocking these earnings reports out of the park, right? I mean, there's a few. I think like Apple struggled a little bit. There's a couple of the big names, but for the most part, I mean, you've seen Nvidia, and we should. I think
We
they're
should be
supposed to be
getting those earnings
short, yeah,
shortly. I think maybe tomorrow on
today
that.
or
Well, I
tomorrow.
think
Yeah.
that's going to
So
set the tone
Mhm.
because
yeah.
I think Nvidia really, in the fall of last year is what sort of set the tone to drive the markets up in AI.
Hmm.
So now they're going to be carefully watching them. So it should be an interesting read in terms of the markets
Yeah.
once they report actual earnings.
Yeah. So the US will be interesting. Like, we talk about what's the sustainability of something like this, like continuous positive news, especially from these big companies. You look at their valuations, they're off the charts. Like, how are they going to keep going, Courtney?
I have no idea. I mean, we've been
Yeah.
saying this for for the last 3 years, for the
Yeah.
last 3 seasons. Like, how high can it go, really? And you know,
Hmm.
they keep coming up with new innovations, and they're all
Hmm.
really well known names that people trust, so they keep buying in them. So the question is, will people stop buying them? I don't know. I think it's interesting that mid to small companies really haven't done much of
Yeah.
anything in the last how many months. So the question is, when are those going to start ramping up? Are they going to start ramping up, or are
Hmm.
people going to
Well, I don't
still
think it's
invest in the
sustainable,
apples
the
of the
market
world?
value that they've placed upon themselves, right? I think it's been driven up, and earnings will tell the tale.
Hmm.
Ultimately, once the actual earnings come out and the calculations
Hmm.
are done, it's saying, well, the value of the company is not that high. Sell,
Hmm.
sell, sell. So
Yeah.
like that's what happens, right?
Hmm.
And stuff. So right now it's more on the speculation side And once true earnings come through, then I think that there's going to be an adjustment.
Well, and everyone's just excited because they're all walking around with Apple Vision Pros on now in the grocery stores, scrolling through X as they're picking up their apples in the produce aisle, right? So, I mean, just you see the innovation of this AI and everything where we're going, and I think with these companies, I would say the luxury they have is they're so big that they can squash any sort of competition that comes up, except amongst themselves. But you take out the Apples, the Microsofts, the Tesla, all those big tech names, you take them out of the park, they're going to eat up every other little tech startup that comes. And you're seeing them come out with, they're in our face every day. We're on a computer right now, we have our cell phones, they're there every single day, so they're constantly in every household, virtually every household. So there's constant sort of almost a need for them, or what has been a societal need for these companies, that it hasn't really diminished even through tough times.
Well, Brad, you talk about all this innovation and the AI, and every time there is an innovation in our society, there's always at some point pushback from society, people who don't want to implement it, laws that get enforced. So it's not going to be a smooth ride. If people think that AI, everybody's going to be wearing these glasses tomorrow, forget about it. It's not happening. You're going to have people who say, no, I'm going to die on this hill. I'm never going to use it. So it won't be the smoothest ride.
I think Joe needs a pair of the Apple Vision Pros.
I'm going to get some. Why not?
So we'll move on to sort of the economy and investing. We've talked about earnings season already, with sort of that overall sort of positive sentiment from some of the major companies. But I have, there has been some companies that have missed the mark. You're starting to see it. And then we did dabble into sort of the jobs numbers and whatnot. And we talk about headline cuts. This is the way I'm phrasing it. It's headline cuts, because you see the big headline, Bell Canada's laying off a bunch of people. They're in a big spat with the government. But overall, the company or the country added 37,000 more jobs in January. So we're adding jobs here, despite, you see headline layoffs. And that's kind of the way I'm putting it. So where are we going with jobs? Because if you read headlines, you think we're losing jobs. And then you read the reports come out and we're actually adding jobs. So I think it's quite fascinating on that front.
Yeah, but I'm not sure, and I'm reading that it's not the quality jobs. We're not like full-time package included jobs. We're talking part-time jobs. Is that, great for our economy long-term? I don't know. Like, is this just a cost-cut measure that companies are implementing for now? I don't know.
Yeah, I think it's a smart business move for a lot of the companies, right? Like if they're forecasting and everybody's saying recession, so they're going to create some jobs. They're going to create them part time. It's going to give them flexibility to lay people off randomly, not get hit with a big bill when they do lay them off. So it makes sense from a business point of view. From a consumer point of view, not that great, right? Unfortunately, you've got a part-time job. You don't have stability there. Maybe you're sitting on a mortgage and some debt and whatnot, and that doesn't help you move forward. So it's good for business. It is a typical strategy as we hear more and more about recession, and we look at recession coming forward, but it's not good for consumers. And maybe that's where the trend of lower spending, a slowdown in spending is happening, is because even the consumers are seeing that I don't have a full-time job anymore. So it's just a part-time job, may not be that quality job, as you mentioned as well, Courtney.
It's time to build up your emergency funds, just in case, if you have one of those part-time jobs, pay down the debts and start saving for the what.
And I think it's important to remember too, a lot of these numbers we look at, it's earnings from 3 months ago or from the end of 2023, right? And we've only really seen a short period of time here since they've sort of stopped hiking rates, and we're in that tough period now. And I think companies were maybe able to squeeze a little bit out at the beginning, and now they're realizing, okay, repeat customers probably down, people are we're in a new year now. People are revising how they're spending their money because they're going into this year saying, okay, interest rates are at their peak. We got to get through this year, and it's not like interest rates are going to be 2-3% at the end of this year, unless we see anything catastrophic happen. So people are forecasting and planning, their New Year's resolutions to kind of cut back on stuff, and that's where I think it'll be interesting to see this early part of 2024. Look into March, April. How does that all sort of play out with company revenues and how these companies are pivoting during these times? I think they were able to get away with it a lot of last year because you were through the summer, people traveled, then you get into the holidays, people are trying their best to, spend a little bit of money during the holidays, or they save to spend during the holidays, and then you're entering into that new year period here. And that'll be, I think, interesting thing to watch on that front.
Yeah. It really feels like we've rolled to this peak and we're about to drop off the other side, but we don't know what direction we're going to be dropping. And so it's just a matter of waiting out the next few weeks or months to see.
So we'll move on to the market outlook here. Overall sentiment is a little bit more positive than expected. Ironically, this time last year, we were talking about how the sentiment was negative, and look what happened, right? So sentiment, take that for what it's worth. If we're taking it for what it was worth last year, then don't expect the sentiment or don't expect the results to be positive. But sentiment does seem to be a little bit more positive, and a lot more talks of this sort of soft landing, ease into a recession. Again, the data coming out of that technical recession officially from Stats Canada will be big. And same with the sort of data from the US as well. Rate announcements, we've got some coming up both in Canada and the US in March. So it'll be interesting to see there. I don't think many people are forecasting any cuts or hikes, but will be interesting to see. I will note we just got inflation data this morning down below 3%. Inflation in Canada, so 2.9% for the first time in a long time have we seen that number. So driven mainly by fuel prices. Fuel prices are down from this time last year. So what are your sort of thoughts on where the market's heading? Joe, I'll start with you. What's your thoughts sort of on the market, where we are with inflation here, and what's going to happen in the next little bit?
I think there's going to be a lot of sensitivity in the markets in the next few weeks, especially with the earnings coming out. I think it's going to test some of these valuations that are out there. I believe it's going to be a bit rocky. So that's a good thing. I think that's something that, as an investor, that kind of makes sense. You want to see that. But I feel that that's sort of the trend. And yeah, the soft landing, hard landing, really, I don't know either way in terms of that. A landing's a landing, right? So we just got to land. We got to land this plane here more than anything else.
Let's move on to something else, right?
Yeah, exactly, because we
years
keep
now
going over and over on this and stuff. And sentiment can change quickly, and I think that's important to sort of note. Like, it can change within like a day, like just some bad news, some bad situations. Keep in mind we have a couple of wars going on here too, right? We never even got into those, but so sentiment can change very, very quickly. So I think moving forward, it's going to be a volatile sort of second quarter as well.
Courtney, what are your thoughts sort of on where we're heading here?
I'm not really sure, to be perfectly honest. I just feel like everybody's kind of holding their breaths to kind of wait for things. I mean, it's great that inflation is down below 3%. But I think we talked about this, I think the last podcast. I don't think either the Fed or the Bank of Canada are going to lower rates in the spring. I think they're going to wait to see if that number.
And I think you're saying spring because it's been so warm outside, Courtney.
So yeah.
But yes, as we enter these spring months.
Yeah.
Remember with the inflation too, they want sort of the long-term average to be down, right? Like, so these drops, as much as they're good in terms of the fight for inflation, the central banks are looking for that long-term average to be below the 2% and stuff. So and that takes time. That's the key thing, right? That takes a lot of time to get that average going down. And I think people seem to miss out on that important point.
Yeah, I think people, there's maybe a misconception out there that as soon as inflation hits a set target, all right, we've hit it, we're good,
We're
drop the
good.
rates
Yeah.
back
Move on.
down, we'll move on, right? But
Yeah.
look how long it's taken for the interest rate hikes to work its way through the economy to even get us to below 3%, right? And that's only for this month over year in January, right? It could be back over 3% next month. We don't know, right? So it's so uncertain with a lot of that I think that's where you both touched on it. You're kind of walking on eggshells with hope that you're going to see the pot of gold at the end and not a pile of coal as you're on your way on this little track of 2024, but you're not sure, right? So
yeah, well, the last the Bank of Canada wants to do is lower interest rates in March,
exactly.
and then in April or May have to hike them back up because the data has flipped. So, because let's face it, there are people waiting for that inflation, the rates to go down so they can start buying, and that's not what the Bank of Canada wants them to do, because that justifies companies raising their prices even more. So, that's why I say I don't think we're going to see it in the spring. I mean, I know the weather's nice outside,
that's
but
my
no, I
one
think it's
biggest
going to be
sort
a
of
while.
worry with, and I think the Bank of Canada is worrying the exact same thing, that the minute they make one interest rate cut, everyone's going to be like, okay, we're going to be down to 3% interest rates by the end of this year. Next year, do you know how many houses will be up for sale on my street as soon as we get one interest rate cut? Everyone's going to be selling their house. Everybody's going to be out buying a house. It's going to cause, I think it's going to cause like a form of chaos, right? Like there's going to be so much movement because people are going to think, okay, it's only going to be good ahead. It's only going to get better. Yeah,
even if it's
absolutely.
a 0.25%, even a 0.25% drop is going to have some people
so
making
I think they're
their moves.
Definitely cautious is I think the way to be, because and that will just cause such an uproar in many different ways, and you'll see even more volatility across multiple different sectors, right, and economic data. So I think that's sort of the consensus for sure for now. So we'll wrap up this month's podcast, Joe, with the tip of the month.
Yeah, so when this video and podcast air, will be in the depths of March here. So March, it's tax time now. So we're going to be looking for our tax slips. Make sure that you get all your tax slip, get them organized. Especially if you have non-registered investments, keep in mind a lot of the T3 slips and T5 slips will come out in March, and sometimes late in March, sometimes into April. It depends on the corporation and the company that you've invested in. So do a double check, make sure you've got all your receipts. Government will sort of penalize you if you continually, and I say continually, miss slips when you file your income tax return. So keep that in mind. If you're lucky enough to get a refund, fantastic, but do something constructive with that refund. Just pay down some debt, pay down some mortgage, add it to your RSP for next year. I think that's a key thing. People often look at that refund as a windfall. It really isn't. It just means you've overpaid on some of your taxes. Maybe you've structured that refund because you've done an RSP contribution, and that's great if you were smart enough to do that. But do something constructive with that refund. If you ended up paying or going to have to pay, remember you do have to pay by April 30th to avoid late or interest, I should say. We would have already filed the income tax return by April 30th. Take a look at your situation for next year, whether you need to take a little extra taxes off or do an RSP contribution for next year. Doesn't take much to do, 50 or $100 a month. You won't feel it. You won't see it on your income, in your loss of income. There wouldn't be much of a loss. I'm sure you spend $100 at Starbucks for no apparent reason. We all do. So I'm to blame as well. So think about those types of strategies as you gear up for tax season.
Awesome. Well, thanks everyone for listening and watching. Wherever you are, subscribe to whatever platform you're watching us on. Leave a like if you can, and we'll be back with the podcast next month. Thanks for watching.